Yeah, what's up guys? My name is Rinuel. Welcome to my channel. This is actually the first video I'll be posting on this channel. So as requested by my community, so I'm going to be talking about imbalance and order block. First of all, let's start with imbalance. What are imbalance? Imbalance are areas of inefficiency in price, areas where there are no equilibrium, sometimes called fair value gap. When you look at your charts, those gaps you see on your charts, those are called imbalance, inefficiency, or fair value gap. It means there's no equilibrium in the market, there's no equal amount of buyers and sellers in the market, and these gaps are sometimes caused by high impact news and sometimes caused by the institutions. Then I'm also going to talk about order block. Order blocks are areas where multiple orders have been placed by institutions, by the big banks, where then price later come back to those zones to fill in those orders, to take out those orders, either to the upside or to the downside. Now come with me to the chart. Let me show you what I mean by this.
Alright guys, let's get to it. So what is imbalance? Imbalance is an area of inefficiency or an area where there is no equilibrium in the market. Efficiency means the market is giving buyers and sellers equal opportunities to buy or sell, so it is balanced or at equilibrium. What this simply means is that on a normal condition, there's supposed to be equal amount of buyers and sellers in the market for the market to be efficient or balanced or at equilibrium. So in an instance where this does not happen, where there are more buyers or more sellers in the market, it means the market is not efficient, the market is not balanced, and this will cause big push in the market. It is also an area where there is an aggressive push in price, either to the upside or downside, hence creating an imbalance which price will eventually come back to fill and be at equilibrium. This push are majorly caused by news events, market makers, to cause inducement or manipulation. Imbalance can be used to determine where we set our take profit and stop loss, stop loss, and our entry points. When looking at a balanced or efficient market, we notice that all wicks meet, meaning that it is at equilibrium. That is, there is equal amount of buyers and sellers. However, in an imbalanced price action, wicks don't meet, meaning that it is not at equilibrium. Price will eventually come back to fill that imbalance. So let's go to chart and let me show you what this explanation means. So like I said, imbalance is an area where there is no equal amount of buyers and sellers. For example, now if you look at this particular chart here now, this is an imbalance here now. There are more sellers in the market. And what the price do? Price eventually came back. Let me mark this out. Price eventually came back to fill that imbalance. Look, price was going down. It eventually came back to fill up that imbalance, hence causing an efficient price action. This is another imbalance here now. This is an imbalance here. This is an imbalance here. And what do you notice? Price came back all the way up to fill up that imbalance. This is an imbalance here now. If you notice, whenever there is an imbalance in the market, price will eventually come back to fill up that imbalance. This is an imbalance here now. This is another imbalance here now. So how do you identify imbalance? In an imbalanced market, wicks don't meet. What do I mean by that now? Take a look at this particular wick here now. Candles don't meet. Take a look at this particular candle here now. Take a look at this particular candle. See how they meet. The wick of this particular candle now, and the wick of this particular candle here, they meet. So the wick of this third candle and the wick of this first candle meet. Take a look at this green candle here now. take a look at the second week, take a look at the third week. Now if you check the week of this particular candle and this particular candle, they meet. The week of this candle and this week of this candle, they meet. But however, in an inefficient price action, the third week don't meet. For example, now here's what I mean. Look at this particular week now. Take a look at the second week, then look at this other third week. If you notice that they don't meet here now, meaning that there was an imbalance in this particular price action here. There is inefficiency here. It means in this instance now, this is a situation of buying imbalance now. Notice that in this instance there were more buyers in the market. In this zone here, there are no buyers in the market. So what did price do? Price eventually came back to fill that imbalance, hence giving buyers the opportunity to join the move. However, in an imbalanced market, this does not happen. Look at it here now. This happens all the time. That's why we use this to set our take profit areas in the market or our entry points in the market. So look, for example, now imagine you are in a trade now, you are trying to sell now, and you see the market is already moving. But because of this imbalance, you just wait for this market. What will you do? You set your entry points at this particular imbalance area, and whenever price comes back to this particular imbalance zone, you know that it has given you the opportunity to join the sell. So now you take your entry at this particular zone, set your stop loss probably above here or above this particular other block, then join the trend. And if you take trade like that now, this should be more than a 1 to 5 risk reward. Look whenever there's an imbalance in the market, you notice that price will eventually come back to fill up those imbalance. Look at imbalance here now. Look at imbalance. You notice that this week here and this particular week does not meet. What did price do? Price eventually came back to fill that imbalance, even mitigated this particular other block here, came back to fill that imbalance before going down, before coming back also to fill this other imbalance. Look at this huge imbalance. Look at this huge imbalance here. What did price do? Price came back to fill up those imbalance before continuing its move. Look at this particular imbalance from here now, and what did price do? It came back here to fill that imbalance. Look at this under imbalance here now. Look at this week here now and this week here now. They don't meet. Eventually 1 week will come back to meet it. Let's mark it out. Look at what happened. Eventually price came back to meet it, causing equilibrium in markets, giving buyers and sellers equal opportunities in the market. Look at under imbalance here now. What the price do? It came back to fill it. Look at this imbalance here now. Whenever there's imbalance, price will eventually come back to fill up those imbalance. So let's look for a buying market now. I think I've been using a selling market opportunity to do the explanation. Now look at this now. The market was going up in this instance now. It was going up in this instance, and then this is an imbalance here now. Price came back to fill up that imbalance. Look at this now. Notice this week here now and this week now, they did not meet. What did price do? Price came back to fill up that imbalance. Price will eventually fill up imbalance. Imbalance will eventually get filled up in the market, and that's why we take advantage of this opportunity. Whenever we see an imbalance, we use it to set our take profit, our entry areas, or our stop loss areas in the market. So now let's go to other block. Other blocks are areas in the market where large orders were set, hence causing a massive push or imbalance in the market. Or rather, it is the last buy or sell candle before an aggressive push in price, either to the upside or downside. Buy order blocks are area of demand, while sell order blocks are area of supply. These order blocks indicate that a large order has been set by the big banks or institution, hence causing a massive pull either to the upside or downside. And because price must be at efficiency, the other blocks will later get mitigated, hence causing equilibrium and sometimes build up of liquidity that will later be taken out by the market. However, this doesn't mean that every other block must be mitigated. Long-term economic trends can cause another block not to be mitigated. So let's get to the charts. Let's explain this now. So like I said, what's another block? Another block is an area where there are large orders, like lots of orders has been placed in the market. Lots of orders has been placed in the market, and price will eventually come back to fill those orders. Give me a moment. So I want to show us some example of other blocks in the market. Now let's take a look at what other blocks are. So like I said, other blocks are the last buy or sell candle before a massive push or pull in the market. More like it is an order block below an imbalance, below price inefficiency. So now let's take a look at this chart now. If you notice this massive move here, this imbalance here now, here is another block. It's an area of demand or supply, meaning that large orders have been set. In this instance now, large orders of buy have been set, and markets will eventually come back to take those orders. So that's why we take opportunities of these other blocks. We wait for market to come back to fill in those orders before joining the move. So now look at this now. The last sell candle before a massive push in the market, and what did price do? Price came back to mitigate that other block. It filled out this imbalance, came back to mitigate that other block before going to the upside. And also look at there's another block here now. Let's go to the 5 minutes time frame now. Look at, there is another block here now, and what did price do? It came back to mitigate that other block, push down a little bit before going up. This area of other block, they are very sensitive. They are very sensitive. Now look at this now. There is another block here now. It means there was large order here now. There was large order that have been placed here now, and what the price, it came back to fill in those orders, push down a little bit even before taking out the stop loss. It is respected that other block. It respected the other block. So here is another other block here now. Look at this particular zone now. If you notice the last I think this should be the 30-minute time frame. Okay, this. So now if you check this now on the 45-minute time frame now, there was another block here now. Look at the last sell candle before this buy move now, meaning that there were lots of orders placed in this place. Now what did price do now? Price came back to eventually fill in those other block, take our orders, move a little bit to the upside, filling out this imbalance before continuing its move now, hence creating another other block here now. Look at this also now. Now let's take a look at this particular order flow here now. Notice that before this massive push here now, before this massive push to the downside of the market, there was another here, there was another block here now. There's another block here now. Lots of orders were being placed here now, and what the price, it came back to this particular order block, mitigated the other block, fill out this imbalance here now before pushing down. Also, if you check this out also now, if you go to a lower time frame of this now, the lower time frame of this, even without going to the lower time frame, this is a 15 minutes time frame. If you go to this particular zone now, there was another block here now. before this massive push to the downside, price did came back to mitigate that other block before continuing its move to the downside, and that was why I took those opportunities. That was why I took the opportunity. So look at this also now. Look at this small order block here now. This small order block here now. It means that before this massive inefficiency, before this massive push here now, price did came back to mitigate that other block. Look at price did came back, fill this imbalance. Let me delete this. Price did came back, fill this imbalance here at first, came back, mitigated that other block before pushing to the downside. And this is something that happens every time in the market. Imbalance do get filled lots of time in the market. Other blocks do get mitigated. So let's check another chart. Let's check GBP USD. GBP USD. Now let's take a look at GBP USD here now. Look at here now. Before this massive push in the market to the upside, before this imbalance, there was another block here now. There was another block. That is the last sell candle before the push to the upside. And what happened to markets? Price did came back eventually to mitigate that other block here now before a little bit push to the upside. In fact, price went up to this zone. At least this will have been a 1 to 2 or 1 to 3 risk reward on this zone. Price came back to mitigate that block before pushing to the upside. And look at this other flow here now. Look at this here also now. Look at this. This massive push to the upside now. There was another block here now. The last sell candle before this massive push, price did came back to fill that, to mitigate that other block, fill out imbalance before pushing to the upside now. This happens all the time. However, that does not mean, like I said in the explanation, that does not mean that all other block must be mitigated in this side, in this zone also. Now I think if we go to the lower time frame, yeah, exactly. If you check the lower time frame here now, what do you notice here now? The last sell candle before this imbalance here now, before this massive push to the market, price did came back, fill out imbalance, mitigated this other block, and boom, push to the upside. Same thing here now. So how do we identify these other blocks now? Wherever we notice, first of all, when taking a trade, you have to look for imbalance. You have to look for imbalance. And how do you identify this imbalance now? Whenever you see gaps in the market now, those are imbalance now. And before those gaps now, there were lots of orders being placed here. Now if you notice this range in here now, these are other blocks. If I go to higher time frame now, you notice that these are lots of orders that have been placed here now. Lots of orders, hence resulting to an order block now. Price did came back, mitigate the other block, fill out imbalance, and push to the upside now. So we use this other block and imbalance to take trade. We use it to also set our stop loss in the market. So guys, that's it all for now. So if you check, you can backtest this on your own now. Check other charts, check your other charts, NZD, USD, Euro, JPY, and all this happens all the time in the markets. And if you're able to master this, you use it to take lots of trades. So I won't go into details. I won't go into more details because I'm working on a course already. I'm working on a video course already. I will explain every detail about this other block origin of order block, how to use it to take decent trade, and also explain liquidity in the market and all. So I will take you on step by step on how to use this order block and imbalance. I will explain further more about this and the SMC strategy I use. I will explain my strategy, how I combine order block and some other conferences to take trade in the market. Like I said, not all order block do get filled. Look, for example, now this particular order block here now, due to large economic events or trending economic events, there's been a continuous push to the downside. So there was no time for the market to come back here to fill out this other block. However, there was another block here now. Price did came back to fill out this other block. I think in the 1 hour time frame, or it's not in the 1 hour time frame. One of the time frame here, 2 hours time frame. What happened here now? Before this massive push to the downside, before this imbalance, there was an order block. Price did came back, mitigated that order block, and when even before price came back to this other block to mitigate it, if you check this now on the lower time frame, should be 5 minutes, I think. So if you notice now, before this massive push to the upside, before price even came to mitigate this particular order block in the higher time frame, in the 2 hour time frame, now there was another block here now. If you check, look at it now, the last sell candle, before this massive push, before this imbalance, price did came back to mitigate it, fill out the imbalance, mitigate the other block before going up to the ups. Even in the lower time frame of this large order block now, there was still another block being placed here now. Price did came back, mitigated it, and pushed down. So right guys, that is it for today. So anticipate my video where I will give detailed explanation, everything about smart money concepts and trading, how to use this order block and a balance and some other tools in the market to take your entries, how to combine confluences, and how to refine your trades. So all this I'm going to explain in the course which I'm working on. I think I'm already on chapter 2 of the course now, so it won't take long before I release it, and I'll release it to the community.
So guys, thank you for staying with me till the end of this video. So if you find this video useful, please do well to subscribe to this channel, share this video to other people, so this will encourage me to make more interesting forex videos on, especially on smart money concepts. So use the link below to join my telegram channel where I share forex signals, educational content and all. Peace.